Hey everyone, welcome in to another daily editorial here on the KE Report. I'm going to be focusing on copper as we saw a move today of copper right up to all-time highs. I'm seeing on my app that copper went as high as $5.03. It has pulled back a little bit from there. I'm seeing right about 492, but look, this move by copper has been strong and now it's right up at some of those all-time highs from just back in March of last year, or March of 2022, when copper reached about 503. So this is I think, big move for copper. We've seen copper stocks running on the back of it. A lot to talk about here as I am chatting with Matt Badiali. He is the editor of the New Energy Investor that's published under the Mangrove Investor, also the CEO of a new copper exploration company, Quetzal Copper. So that's how we tie in this copper discussion here, Matt. Matt, I need to just ask you from a high level view in terms of what's driving this copper move. Look, we can point to economies doing better. China looks like they're starting to rebound, even getting more aggressive in some of the commodity spaces. Maybe it's just simply a rotation of money into commodities. How do you filter through all this noise, Matt? What do you think is driving copper to almost these all-time highs?
I think, the story is about electrification. That's where it starts. We've talked about this on this program many times. You have a shift to using electricity to drive all sorts of things. It starts in the home with home appliances, things that we always traditionally used fossil fuels, gasoline and diesel for. So, your tractors are now, or your lawnmowers are now battery operated, your chainsaws, and anything with an electric motor needs copper. Anything that has a battery needs copper. The explosion of electric vehicles now is driving it. And windmills and solar farms, all those things are using copper in ways that we never had it before. And they're competing with traditional industries that use a lot of copper, particularly home building. So as you build new homes, there's a lot of copper in a new home, a lot of copper in the appliances that go into furnishing a new home, like things like washers and dryers and air conditioners and refrigerators. So you have demand. You also have some institutional and governmental tailwinds to copper demand. So, for example, in the United States, they'll offer you up to, I think it's $7,500 in tax breaks if you buy a new electric vehicle, but only if the metals for the EV are sourced either domestically or with a free trade partner. That's how you get the whole tax break. So you have a tailwind for copper demand, because no matter what you say about those batteries that are in the EVs, you can call them a lithium ion battery, but there's more copper in there than lithium. And so you have a commodity that is being bolstered by new sources of demand in a time when you have a kind of a cap on supply. The traditional mines that have supplied the copper throughout our lifetimes are old now. Head grade goes down every year. New copper mines are slow to come on, and when they do come on, they face some political risk. I mean, there's the great example is the Cobre Panama mine in Panama. You know, the the company that built this mine invested north of $1 billion to find it, develop it, build it. And then all of a sudden, the country's Supreme Court said, you know what? The agreements that we had with you that we signed that said you could come here and look for copper, and when you found it, you could develop it. Yeah, those are all null and void. We're taking your mine. That new mine was supposed to provide 1% of the world's copper supply, and it's offline. So you're starting to see kind of gaps in supply, and we know that because the you see the prices that refiners charge to take the copper from the mine and refine it into pure copper have fallen by half because there's just not enough of the copper concentrate around. So they're looking for it, so they're willing to take a discount just to get the material in. So supply is constrained, demand is expanding, and you have tailwinds, artificial tailwinds from government subsidies also pushing that demand. That's the perfect storm, and that's why we're seeing all-time highs.
Let's talk about that supply side then, because look, we have heard that mines are slow to come online. I did a quick search here and I see a few mines, two in Chile, one in the DRC, one in Peru, and one in the US, all with around $5+ billion tags here, price tags, mostly expansion and ramping up of production from major companies, Tech Resources, Ivanhoe Mines, Anglo American, BHP, and Rio Tinto, all expecting to increase production at these mines. Do you think this is enough to satisfy some of this near term copper demand that is projected to just continue to increase?
No. No, I mean the fact is they just can't come on fast enough. You're these guys are rolling off EVs way faster than we can bring a new copper mine online. Copper mines take all mines take a long time, but you have a couple things right now that really have constrained the development of new copper supplies. First of all, you have capital constraints. In this market today, it's very, very hard to persuade someone to lend you $1 billion and to not get any return on their capital investment for 5 or 10 years. And in the end, are they going to get paid back? Well, we don't really know because, what if the government does decide to take our mine? So putting together a consortium to finance the capex is difficult and it's expensive. And so that's slow. You also have headwinds on permitting. Mining still is out of favor. People, before we started the podcast, we were talking about this. Like when you look at where governments are subsidizing these metals that we need, including copper, it's in recycling. There's very little help out there from governments in terms of building out a new copper mine. And I will say that in Canada, I'm impressed with the critical minerals flow through that you guys, it's a tax break for people to invest in this stuff. That's brilliant, but that's not helping new copper mines get developed. It's not helping them get financed. So I don't think that there's any way that we can meet the demand side and the supplies from the supply side in the next 5 years.
So the majors have been doing very good. Look at almost any of the copper majors charts, even look at COPEX, that is an ETF that has the majors in it. Those are mostly all going to all-time highs. What about filtering down to some of the earlier stage copper companies? I know Quetzal is quite early stage, but even those companies that do have assets in the ground but are looking for capital to build them. It does still seem like the majors are the main source of capital here to build mines that are multiple billion dollars.
Yeah, I think that I don't think that that investors, certainly not the sophisticated investors, have moved too far down the food chain because yeah, like when you can buy existing production, that's cash flowing. Take Freeport, for example. I mean, you in 2022, you could have bought Freeport for about $25 and it's over 50. It's like 52, 58. Freeport has the giant Grasberg mine that it's just one of those forever mines. It's a legacy producer. They own it along with the government of Indonesia. Why would you take any sort of extra risk if you want to play copper? I mean, that's CopX is a great example. That's a great fund for investors looking to just play the copper trend because these guys are cash flowing. They don't have any of the risk of development, and a lot of times, like you said, they can self-finance out of their CapEx or at least reduce the amount of money that they need to borrow because they have revenue. Whereas the new development, guys that don't have existing production, you don't. It's very hard to finance this stuff. You're going to either dilute yourself into oblivion, or you're going to pay exorbitant rates to borrow money to build a mine.
So does copper at all-time highs help this financing hole, I guess, that's in the sector?
I think it does, yeah. I mean, it certainly for Quetzal. I mean, we just started trading the middle of March. We're babies. We're the tiny little company. And when I was out telling people the story before we were public, the reception was, let's say, cool. But now, with copper at all-time highs, I just was traveling around telling the story, just to trying to get eyeballs on the stock, and much better reception. People understand the story, I think, but the junior space is still full of companies that have been around 3 to 5 years. They've got a quarter of a billion to half a billion shares out. They're trading around a nickel or 10 cents. They own their project. It's the same project that they brought to market 3 years ago. They're still drilling the same old kind of low grade stuff that they were drilling before. As an investor, I want to own Freeport, right? Even especially at all-time highs. I mean, why do I want to add that risk? I mean, they say in a hurricane even turkeys will fly. And so that there will be a time when these crappy companies have leverage to the copper price, but I don't think that it's where we are today. I don't think that even with $5 copper, it has filtered down to the turkeys yet.
No, it sure doesn't seem like it has. But let's talk about kind of earlier stage then, or even how you would look at different types of assets. And I think we can put them in two categories, much like, let's say, a gold resource here, where you have a smaller, higher grade resource or a large, lower grade, long life asset. A lot of the major copper projects, they are long life assets, but there are opportunities for higher grade, smaller assets. We just don't really see those built at all, considering what we see in like the gold space or silver space, where companies bring online smaller mines. How do you balance these two out? And are there opportunities in those small, higher grade assets?
Let me start with the low grade projects first, because there are a lot more of them around. And the story behind these low grade assets always is, well, higher copper price will solve our problem. The problem is the copper price, yes, it's at $5 now. But when we look at, like, I like to do a long-term average when I look at an asset, right? So it's I don't want to value an asset at the all-time high metal price. And when you look at copper, I mean, the average price over the last decade is probably close to $3 a pound. And so these big projects that are going to take a lot of money to build and to develop, the window of $5 copper, we just don't know how long it's going to be. And so you still have that risk of, if the copper price does return to $3 a pound, you're sunk. These guys, you're going to break your pick. That's not a new story. We've seen it happen in the past. Sometimes the euphoria of all-time high prices in the metal will get will bring people to that story. On the flip side, with the smaller high grade deposits, you have much less commodity price risk. The problem is that, you have the issue of spending all the money to build a mine, and then there's no return on your investment, because it takes all of the money in the asset to pay for the capitalization of the mill and the decline and all that stuff. So if you have exploration upside around those high grades, the high grade deposits, if you can scale it up, or if it's in proximity to an existing mine, that suddenly makes it much more attractive. So I'll give you an example from Quetzal. We used the bear market to acquire some projects, and that we think are the oceanfront property. These are projects that, in any sort of decent copper market, a tiny little private company like Quetzal would not have been able to touch them, because the bidding would have left us in the cold. And all of these projects have the potential for scale and the potential for high grade, because kind of my mantra is, and I stole this from Brent Cook from Exploration Insights. He's a really smart guy. And his point on copper is if it's not 0.6% copper equivalent or higher, it's just not worth your time as an investor. And so, you know, that's kind of in my head, the grade cutoff. And then you have to be able to scale it up so that you can pay for the construction and bring your investors a return on their investment, right? You have to be able to make it worth somebody's while to invest in building your mine. So it has to have some sort of scale and or you have to lower that economic hurdle. So maybe you don't have to build the mine. Maybe you're 20 kilometers from an existing mine whose head grade is so low, its next step down is mining air. And if you offer them, if you offer them a smaller volume of high grade material they can blend into their existing stuff, then you don't need to build a mine. So those are the sorts of things that I look at, and yes, I know I sound like Debbie Downer at a time when the copper price is at all-time highs. I should be jumping up and down and yelling and screaming. Trust me, there are moments when I watch the copper price tick up that I do run around the house and jump up and down and scream and yell because it's pretty great. But it doesn't change my investor outlook right now. It's expensive to build a mine right now. Inflation's kicking all the miners' butts.
It's so true. We continue to see costs rise, but as long as metals prices continue to rise, maybe that can bring in some more investors. Do you see the cost of capital getting any cheaper, though, for mining companies, even at higher prices and what sounds like a bit more interest in the sector? Do you think that the cost of capital comes down for mining companies?
I do because I think you're going to see sources of capital come into this industry that have never been here before. Just like you saw in the lithium space. So, if you had said 10 or 15 years ago that there was going to be a car company that was going to come in and partner with a lithium miner to build a lithium mine, we all would have thought you were nuts. But that's what's happened. And I do think that we're going to reach a point where the copper price is going to be such that you're going to see AI companies that want to build massive server farms that are going to be, hugely dependent on copper supplies, right? They're going to see a value in that. I mean, you go way back to who was the royalty company, the gold royalty company that was spun out of Newmont?
Franco?
Yeah, it's Franco-Nevada. So Franco-Nevada, when they came out of Newmont, one of the things that they did, actually, it might have even been when they were still part of Newmont, but they invested in oil sands to hedge the cost of energy for these gold mines because that was their big cost. And so it wouldn't surprise me at all to see some of these battery makers, LG Chem, some of these car makers hedge the cost of batteries not only with lithium but also with copper. And I see the same thing with some of these tech companies that are sitting on massive piles of cash right now. If you're a tech company and your business is AI and you need to build massive server farms that are going to be super copper intensive, it makes a lot of sense to me for you to go out and find a junior that's strapped for cash who has a very exciting new project that can get built and be the source of capital, at least be part of the source of capital for that mine, right?
That ties in perfectly to a conversation I was having with a copper company that said, yeah, if they could get some more concrete pricing, sign some forward contracts 5, 10 years out, is locking in price, then it could give them the ability and even the confidence to go ahead and build some of these mines. But, we haven't seen too much of that, but I do see where you're coming from there, Matt. And that all ties into that whole, I think, more domestic supply that companies and governments are looking for. Matt, thanks for your time. Thanks for focusing on copper for us today. We'll chat again in another couple weeks. Again, always focusing kind of on the critical mineral side of things. Have a great rest of your week there, Matt.
Thank you very much.